Hello and welcome to another episode of All Things Money. I'm your host, Fatima Attarwala. Today I have somebody who I personally find very inspirational because of her story, and we will go into that. Although there are many questions that I'm sure she can answer for us. She is the CEO of BusCaro, one of the latest mobility startups in the country, one that came into birth after Lyft, Swvl, Uber, Kareem, all the big names had existed, and then came BusCaro. Hi Maha, welcome to my show.
Thank you, Fatima. Means a lot coming from you. That's quite a compliment. Excited to be here.
No, I love your story. I love how inspirational your story is and the persistence and the grit that you have shown. And I know a lot of people know your story, but just as a background, can you tell us what is BusCaro?
Yes, that should be a very easy question for me to answer. Buskaro is basically a mobility platform that does B2B and B2C. What we try to do is solve for daily commute at a price point that's affordable and in a way that is safe for people. Our majority focus is on women and children because those are the segments that that find it most difficult to find those options, right? And so that's basically in a nutshell what we do.
It's not like Uber, you do not download an app. It's not open to the masses. It's very specific. It's niche to if you are working for a company that is offering that service or if you belong to a housing society. That has been your business model, right?
So you still use an app, right? But the difference is that you use the app in the case that your school, your university, your office, your housing society, something has partnered up with us, right? You know this, we've seen a lot of startups shut down that have tried to do high capacity vehicles because it's not then on demand you're solving for Fatma. Mm-hmm. Then you have a 30-seater or 60-seater that needs to be filled out, right? Mm-hmm. And so I could charge you an arm and a leg, but the economics will not make sense if there isn't enough utilization, right? And to best manage utilization and have a very, very low burn, the way we started the business was we said, okay, then we do B2B and we do B2B2C, right? Where you could be an individual user, but your either school, organization, etc., is going to be our sort of client. That means there's multiple other people who are trying to get on that route, right? And so then there's the app for you as an individual, for the organization associated with you, obviously for our captains, and then our backend. That's the way it works.
So you're aggregating at the pickup point or the drop-off point so that you know that your bus is filled.
Exactly.
And that is how the unit economics works when it did not work for others.
Look, I mean, I think when we talk about it working for others, right? I think all tech companies burn money. Mm-hmm. That's the name of the game. And I think over time, profitability is achieved, right? When we talk about Pakistan specifically, when I was starting out, there was no funding going around, right? And so I couldn't take the typical tech route. I had to have very, very sane economics from day one. And so I think for us, it had to be done, in a way that's a lot more profitable and sustainable. And so that's how this came about.
Actually, I think you're underplaying the whole thing. You came up at a time when it was the worst market for mobility. The pandemic was happening, the Ukraine-Russia crisis was happening. VC had just completely dried up.
Floods was exit.
And airlift, yes, just after that. So let's walk over there. Let's walk over your journey. You were heading airlift at that point? Swvl. You were handling Swvl. So let's go back to the time you were handling Swvl, and then we get the news that Swvl has shut down. Let's start from there.
So Swvl was actually...
What was your designation at Swvl?
So I was the general manager for Pakistan. I'm sure you know we got listed on NASDAQ. That was March 31st. I was in New York with
31st,
2022.
2022. March 31st, 2022. Swvl has listed on
NASDAQ, right? Yeah. April is Ramzan, and yet Pakistan is growing significantly, and the economics are improving significantly, and we're just in celebration mode. Mm-hmm. And then comes the beginning of May, and I think I got like a 2-day notice, 36-hour notice, where I started to hear that this may have to happen, and I think the night before is when we knew this needs to happen, and I wasn't willing to accept that. And so while I was supposed to close the company down, I was actually sitting around just making projections where I was like, okay, here's how we can keep it alive with just a little bit of money. Just wasn't willing to accept it. And, I kept sort of trying. But, we were a public company. What had to happen. And so we shut it down. And I just did. I think for me I had to wake up every day and keep doing that. And so I think Buskaro really is my ode to Swvl. And it got created very, very unintentionally the next day out of literally my apartment. And I think I was completely delusional. And I think everyone around me was completely delusional. Because if I think about it now, and you take me back to that summer, there is no way I would have had the audacity to do what I did, right? But I think that just we hadn't even realized what we were getting into and how illogical it was to try and pull that off. And so we just sort of kept going. I raised my first check like 6 months later.
What happened in 2 months that you are nest egg, you're high, everything seems rosy, and then 2 months later you're shutting down?
I mean, look, if you look at that time period, obviously for any company, and I'm not talking specifically about Swvl, but I think when you become a public company, obviously the risks completely change, right? Especially for a company that's not, let's say, yet profitable. I think Russia and Ukraine mean funding situation and investor sentiment globally completely turns around, right? So was Swvl hitting its targets and doing what they needed to do? Yes, I would say they were. But nobody saw those market dynamics changing in the way that they did in that time period, right? And so I think their priority then was to hold on to everything that's already profitable, and shut everything else down. And their primary business was B2C, which was the first thing that got shut in most markets. And so that's really what happened.
So from heading a company that crashed and burned in Pakistan to 3 years later, heading a company in the same sector that just recently raised, what, 2 million was it in funding?
Yes.
So at a time when funding is not that easy. So I mean that journey, the number of rejections you received, and that at a time when nobody's willing to touch mobility. Right now it's fintech or AI. AI especially is very, very sexy right now. So can you walk us through how tenacious did you have to be to get to the first check in 6 months?
It was 450 odd rejections later. It was, I want to say 5 months later. It was close to impossible, honestly. And I think I had my blinders on and I was just ignoring everything that was going on, right? Because when we started setting Buskaro up, we were flooded. And I was trying to grow this little pilot. Obviously, everything that was happening with mobility globally and just with Pakistan, it really did not help my cause. And none of the funds locally were really deploying either, right? And so it was just not happening. But I think for me, I was just looking for one person to say yes. Right. And I sound like a broken record now because I go and say this everywhere, but I don't have another answer. I just needed one bloody yes. Right. And so it didn't matter how many people said no. I think I was just checking them off the list. I have this really ugly Excel sheet from that time that I still have. Right. And I just go mark another box red, another box red, another box red. But then I still had these yellows. Right. And I was focusing there. And then a cell turned green in November. And then we quickly raised our angel round. And then that gave us the opportunity to actually start scaling the business. And that's where it took off from.
I think also what helped was when Swvl shut down, you had a lot of messages on LinkedIn. A lot of people just really wanted Swvl's transport service, right?
Investors couldn't care less about that.
No,
right?
but that is how you got the first bus on the road.
Yes. For me, it was about the users. It was about the captains. It was about, I think, the responsibility of being one day ago the GM for Swvl, right? But obviously to investors, that means nothing, right? And so I think from an investment standpoint, that obviously does not help. From an actual business demand, supply, it makes all the difference, right? Because I could literally go on my LinkedIn and find a user base. And so that really is how that pilot took off.
See, one of the issues that I think the ride-hailing sector in Pakistan is facing right now is there are a lot of complaints about harassment, about security issues with captains. So, I mean, has there such an incident happened at BusCaro?
We're very proud to say that we have not had incidents of that nature. We do a lot of work on safety. And so both from a tech perspective, an operational perspective, and just from a business model perspective, we turn out to be safer. So one thing is with no effort of mine or Buskaro's, just the fact that there are multiple people sitting in a vehicle, your safety has already increased, right? When it's one passenger and one captain, obviously there's a much higher risk of harassment generally. If there's 10 other people sitting there, anyone is less likely to misbehave, right? Now, that's not the case in public transportation because you don't have individual seats. Buses are overcrowded and people are standing. And so, you get a lot of harassment cases. With, however, high capacity vehicles, individual seats, there's a safety that comes from that alone. There's obviously the tech that's involved here. We do background checks on our captains. There's gender sensitization training and so on and so forth. There's a security agency that we work with. We've partnered with Maha Shahzad, I think, from our very first ride. Mm-hmm. And so they have an emergency response team that's on present. Now we've had like accidents, of course, and regular incidents. But their response time is very, very quick whenever there's been, anything of that nature. And so I think for us, that's really been a focus. And that's really why we started this business in the first place, right?
So what's the gender ratio for your passengers?
So 70% today is women and children. And then the children also has boys. But it's about, 70% with children and women, and then it's about 30% male. But we're a small company today. And so those numbers shift very quickly, right? Just dependent on who is the next partner that we work with, right? And if that partner has a lot of women, it goes one way. If it's a school, it goes one way, right? If it's a place where there's a lot of men working, it goes another way. But generally, we have a 70-30 ratio.
Yeah, because I think for a lot of women who want to work, commute is such an issue. How do you safely get there and back? And that also fits, because women are generally underpaid, right? And they're less in higher paying roles. So a safe commute becomes a necessity and essential. Without safe commute, they can't have the job. But I guess if there are a lot of women sitting in that vehicle, then there's less chances of there being a harassment case because there are women who stand together. Right. One would hope and one would assume.
I mean, one, women make less money. But two, women's cost of commute is much higher than a man's, right? Mm-hmm. You're a male and you want to take the cheapest form of commute, you can get a bike. Mm-hmm. You can get behind a bike. You can use Bikea.
You can stand in the middle of the road and just go this. Which sometimes they do.
Right? Yeah. But for a woman, the cheapest even conventional option is a rickshaw, which will generally cost about 4 times that of a bike. And so, they get paid less and then they have to pay a lot more to commute. And so it's, a double-edged problem there. And then there's the affordability issue, there's the safety issue. And so accessibility is a huge issue, right? And so that's something that's got to give.
Yeah, I think different informal groups that I have been trying to assess the barriers for women working, that is very much there. How do you get to work and back at a time in which you can get home and do the cooking and take care of the children, all that, because women tend to be a package deal. Right. So commute is such a small, overlooked, but essential part of any working woman's life. So obviously, we need solutions like BusCaro for that. But you keep mentioning children. Children do not go to work. So where do children factor in?
School. Oh, so we want to get kids to school safely, and we want to do that in a way that's affordable. When we started the business, it was really that we wanted to help women. What we learned very quickly is that transportation is a huge problem for children. And so that then became an area that we got into. We launched a parent app earlier this year, so parents can actually track their children's rides and so on and so forth. And so we've also been doing work with schools and colleges.
Yeah, I've grown up going in the van, but that service is just not available for kids anymore. There used to be a lot more school vans. I think it's also a security issue. How many schools do you have on board right now?
So some of the schools that we work with then have multiple campuses, right? So for instance, we work with Beacon House. Now that, of course, they have campuses all over the country. We work with a bunch of them. We work with Hamdard. We work with about, I'd say, 6, 7 institutes in total between schools and colleges.
And how many clients, customers, small, big, do you have from the private sector, the companies?
About 60 odd.
Oh, yeah. So it's basically the companies and not the schools. Do you think that there is a lot more potential in schools in the parent app versus the commute for women?
Fatma, look, I think that the commute issue for women, for children, for men, is humongous in this country right now. We don't really have public transportation, which if it was miraculously safe tomorrow, the amount of money we just need as a nation to even create the amount that's needed, it's never going to happen, right? And so these are all individually massive problems. I don't want to say one is bigger than the other, right? I mean, if you ask me as a woman and an adult, there's nothing more important to me than a child's safety, right? And so from that perspective, sure, like, you know, I'd solve that over a woman's. But there's also like simply the problem that there are women who are trying to go to university or who are trying to work, and there's no safe way for them to do that, which is also a humongous issue. I can talk about men's commute, and that's a humongous issue, right? And so I think this is just such an underserved, it's just so underserved that one over the other, I wouldn't know what to tell you.
And as you keep mentioning, it's a very underserved area. And we had a lot of players trying to solve for that problem. But the unit economics did not make sense. Basically, unit economics means, right, that the person sitting in that seat, what the fare that they're paying is not covering the cost of the seat. Now, you have solved the unit economics problem to a certain extent by aggregating at the drop-off or the pickup point. So you have a full bus rather than 5 people sitting in a 20-seater covering the cost of 20, because then the fare rates would be too high. But as you mentioned, a lot of companies have burn rates, a lot of tech companies have burn rates. So would you be willing to share your burn rate right now?
Yeah, absolutely. It's negative 3%.
Negative. So that is the loss that you're making per year, per month.
So we're negative 3% on our P&L, like as of this month. We're set to be profitable in the next few months.
In the next few months, I think it was by December that you were expecting to go from the red to the green entirely through covering all the costs.
Yes.
So another thing, like you are one of the few companies right now who did receive funding from multiple avenues, and it came down to $2 million. So what do you intend to do with that funding?
So I'm going to comment on a few things that you said. The question part, I'll go at first. In Pakistan, working capital is the primary reason that founders, unfortunately, actually raise equity, right? Which is not the case anywhere else in the world. The idea is you raise equity because you have a certain burn. Now, you might wonder, she's at a negative 3% burn and she's saying she's going to be profitable. Why does she need money? And ironically, it's not to burn. It's simply for working capital, because we don't have the luxury of walking into a bank and saying, hey, give me a working capital line, right? Pakistan, getting a working capital line means आप अपने घर के papers रखवा दें. अब कितने घर होंगे मेरे पास, right? जो मैं रखवा. And for me and for a lot of other founders, this is a humongous problem. And so what we end up doing is we say, okay, we'll give away more equity, at least then we'll get the money, right? And you journalists talk about the funding route, and there's so much of a focus on this lack of, equity raises. And sure, that's a real problem. But that's still a much smaller problem than the other problem, right? Which is for, if you're a fintech, if you're a mobility player like us, if you're most types of businesses, you need access to working capital. How does one solve for that, right? And that's a topic people aren't really speaking about. But I think that's a huge issue in our ecosystem today. And so that's really why we raise the money. What that allows for us to do is bring on new clients. We have an enormous pipeline, literally, that we're just going to be executing with this, where let's say you had a company that already wanted to work with us. We didn't have the money for working capital. We sort of put you on hold, went to investors, got that money, and then came back to you and said, okay, we'll sign up your business, right? And in our case, the working capital requirement is there because we'll bill you at the end of the month. We've obviously had to pay for fuel, give money to captains throughout this month. And so in the interim period, there's that amount of money that we need. And that's why we have raised funding primarily.
Because you have an asset-light model. Any of the buses that you're driving, any of the vehicles that are being driven do not belong to BusCaro. And a lot of tech companies, they are asset-light because why spend so much money on assets when you can just, it's a more sustainable model. But then when you go to the bank, our banking system is very traditional. Earlier, we had a guest. He was the COO of a bank, and we were just talking about SME lending. I was actually thinking of you when I was having that podcast, because that was the same challenge that he was pointing out. His point of view is that without collateral, it becomes even with collateral, it becomes tricky, because how do you verify? What do you do with that collateral?
So, a couple of things.
Yeah.
One is, funny story, I'm not counted as an SME in Pakistan. Buskaro is not counted as that, right? Though we are one, according to all, global ways that you look at it. But in Pakistan, the amount we've said in PKR of revenue that a company generates, we had already crossed that a year and a half ago when we were a year and a half old as a company, right? Now, you've even taken me out of the SME pool, right? And done the same to most startups who exist today. So we don't actually even have the luxury of getting those finance options. Number one. Number two, it's not complicated, because you don't want to lend to Buskaro. You don't have to, really. You are actually lending to Buskaro's clients. You have evidence that, let's say you want to lend to company X and you're going around giving them those offers anyway, and they probably bank with you. It could be one of the biggest textile companies, for instance, in the country, right? They are signing off and saying, we will owe Buskaro X amount of money in 30 days, right? You have a history of that money dropping into the account every single month. And so this money will come through. Now you can also say, okay, let's have a joint account. That money is being dropped there. The bank should take what they want from it or what's owed to them and then leave the remaining, right? There's a lot of ways to de-risk this. I think, and I'm just going to say it, I think we're just lazy as a country, because I think the problem is not the risk profiling. The problem is, हम तो हमेशा ऐसे ही करते आए हैं, right? This is just the way things are done, not that risk is too high. I could have been a local transporter and I could be running Maha Private Limited Company. My options would be a lot better, whether that's with banks or any other form of lending, right? But we have this sort of fear of tech companies, or the fact that they have a certain burn. Yeah, sure they do, but they also have money in the account which they've raised from investors. How does that really affect you? And so anyway, I realize I've gone on a bit of a rant here, but it's a very frustrating sort of system. We've raised $3.5 million in total. Our lifetime burn has been just a little over $1 million, right? Technically, I could have just not raised the rest, and I could have grown a lot faster if I had that kind of support in this ecosystem. And any other founder who wants to be honest with you will tell you the same story.
See, I was at a roundtable recently, and I think I had somebody from the National Incubation Center say to one of the regulators sitting at the table who deals with financing that there was a time when there was a lot of VC funding coming in, and there was a boom of startups. And the SVP the banks reached out to us, to the NIC, National Incubation Center, and said that we want to finance them. And they took a lot of forms and took a lot of information. Nothing came out of it. So the representative of the regulators was sitting there. He was like, listen, why are the tech companies coming to the banks in the first place? They have VCs, they should go to VCs. So I think they just don't understand the tech sector. There's really dinosaurs sitting there who don't understand what tech companies do, why they don't have assets, how they make money, and why do they have working capital requirements. I think some kind of bubble going on there.
It's ridiculous, right? Because VCs are there for, number one, a very different reason, right? VCs are there to give you money to burn. And the idea is you'll grow exponentially and you'll get them returns through that. VCs are not there because you need working capital, right? So that's ridiculous, because even if you are getting money from VCs, and let's say we've gone back to 2021 and money's flowing in, why would you give up equity in your company when all you really need is debt? And so that's absolutely ridiculous.
Yes. So when you go to a VC and you explain to them, this is my requirement, this is my working capital requirement, is it harder to get money, raise money, because they want exponential growth from you? They don't want to finance just your day-to-day operations. So is it a harder sell?
I don't even know what a harder sell is, because no one is looking to invest in Pakistan, really. No one's looking to invest in mobility. No one's looking to invest in anything. Sure, would it be easier? And then also, I'm going to them for a reason which has nothing to do with them. Like literally, they're like, but you're going to be profit. Why do you want my money? And I'm like, well, because the bank won't give me money, right? It's ridiculous. But I think even without that, I think just fundraising is not easy for this market.
It's not easy for them. So as somebody who has raised funds multiple times and have dealt with the NASDAQ and the international community, what advice would you give to founders and startups? How do you go pitch and convince?
We are in a market which is not interesting today, right? We've lost the hype. We've lost the 2021 days. So it's not, oh, like my pitch is better than yours, so I'll get the money and you won't get it. It's also not about research, right? Where 3 years ago, 4 years ago, you looked up who's interested in this particular area, like who's interested in, say, mobility or who's interested in XYZ. None of that is really the case, because even if they are interested in your particular area, they're not necessarily interested in your market. And so I think what it, comes down to is it's a numbers game. You don't know who will invest in you, right? The chances of you writing me a check are no different than the chances of a mobility expert writing me a check. That's just the reality that we live in. And so I think for me, all of that is bogus. Just go to everyone, ask for money until someone says yes. And, and again, I'm a broken record, but I try to find 99 no's because I have a 1% conversion. And so what I've learned about my ability to sell from my data is that 1 yes for every 99 no's. And so for me, as quickly as I can, get the 99 no's, get the 1 yes, chase the other 99, get the 1 yes, and that's how I fundraise. And I can't give you anything that sounds more intellectual than that, because this is the reality.
So basically, given the market that we are in, given our macros, at the end of the day, is being a squeaky wheel, just grit and persistence.
I think of myself as like a girl in the fish market selling fish, right? Where I pick up the fish and I'm like, who wants it, right? And I just keep screaming till
it's a model that works for you.
It's really the only model that can work, because if you want to intellectualize this, who in the world is trying to invest in Pakistan? Mm-hmm. Who in the world is trying to invest in mobility? Who is trying to invest in anything other than AI? Who is trying to invest in a company with this kind of uncertainty, right? Or this sort of a political situation, so on and so forth. And so you can't make this this is not technical anymore. That's what I've learned. You need money, keep asking till someone says yes. That's literally how I look at it. I am shameless. I just look for as many leads as possible. And then I have a larger pool to convert from. And so I'm trying to solve for the bottom of my funnel.
Thank you for being so honest. I have so many guests talking about the potential, the Gen Z market, the numbers of population that we have, but then that works against us as well in terms of resources, right? We do not have enough resources given the number of people. So even if you have BusCaro, we do not have a regulatory environment that will support you. We do not have a financial environment that will support you. We do not have consumer purchasing power. We do not have enough people who can afford enough jobs to be able to pay for the commute. So they settle for lower paying jobs.
I'm not saying that the market size is small in this country. Not in my business, not in anybody's business.
But we don't have the purchasing power for it.
But purchasing power is a significant issue, number one. Number two, we don't have the luxury of building like a regular tech business, right? If I launched BusCaro in a different market, I would have gone after users and just gone after scale and just grown massively, right? I would have played the game that Uber played.
And did not win in Pakistan.
Right. But that game works if I'm building in Silicon Valley, that's exactly what I'm going to do, right? And then the propensity to pay is also high enough for these users, where the lifetime value of the consumer is eventually going to make sense for me. It doesn't make sense here because it also cost $30 odd in terms of customer acquisition cost in Pakistan for mobility companies, even a few years ago when I've done B2C, to acquire this user. Mm-hmm. Okay. Now, when you convert that into rupees and you're charging in rupees and your revenue comes in rupees, that's too high an amount for you to make your CAC LTV ratios to work on, right? And so it's just also a very, very different market, I'd say. But yes, like our market size, it's all there. That doesn't mean people are lining up to invest in this market today. That has not been the trend in the last couple of years. 2022, 2023 have both been very depressing. 24, 25, things are starting to look up. We've heard of a few funding announcements this year, and there's been some great news. But I don't think, there's investors lining up for any founder and saying, please take my money. I think there's a lot of effort going into it.
I think that's also the global freeze, right? There was a time when there were VCs were throwing money to all markets, everywhere, in multiple sectors, and then the whole crash happened. And it's not just Pakistan, the funding freeze, right? It froze up in US and other countries as well. Plus, a counter argument that I get sometimes from critics is that because the dollar is so expensive and the rupee is so cheap, when you have dollars coming in, it should last longer. So the burn rate that your predecessors had was ridiculously high. And with the amount of money they had, they shouldn't be as unsuccessful as they ended up being.
So I have to defend my predecessors because a lot of them are actually me. Look, so I don't think that's fair because number one, and when we talk about mobility, our costs are very, very dollar based. Fuel is linked to where the dollar is, which means that is going to be more than half of a company's entire cost structure, right? For any of them. And so anyone who turns around and says, oh, rupee, that's really incorrect. In fact, one of the arguments that I make in my business throughout is I say, look, I mean, devaluation doesn't really hurt us because if you look at my charts in USD, they're very consistent. If you look at them in PKR, they go like this, right? And so it's actually the other way around is what I feel, right? For a business like mine, because in rupee, fuel goes here, fuel goes there. That means my cost of goods sold goes up and down. But in dollars, it's really quite stable. And so I disagree with that, number one. Number two, nobody would have funded a mobility startup 10 years ago who wanted to grow sustainably. This word sustainable is only 3 years old. Nobody wanted sustainability. And so sure, they could have come and they had the ability to have very successful unit economics, but that's not the way that you scale tech businesses. No investor would have written checks for them or, come into their next round. And so was that really an option? I would say no, right? They would be small little private companies that you and I have not even heard of if that's the game that they played. You look at an Uber, you look at an Amazon, you look at any of these companies, they've burned money, it's taken time, they've gotten to profitability. When you want to, take a dig at Swvl, I mean, that company literally launched, pandemic happens in Pakistan, pandemic ends, they relaunch, they grow very significantly, work on their economics, and then, globally the economy crashes and they're forced to shut down. Like, I don't think it's fair to say that they were doing it wrong. We were looking for high growth companies, and that's what they were. And so I think that's my take on that. And secondly, if you want to talk about ride hailing, I'll talk about another one of my companies that I've been at, which is Careem. You and I, or someone sitting at Careem, could not have guessed where fuel prices are going back in 2015 when they launched. The unit economics made sense. It stopped making sense much later because fuel prices rose so significantly and our salaries in comparison to that have not, right? And so that's a delta from much later. Careem had become profitable even in Pakistan years ago, and then obviously things happened. But so I think these are all, I think it's very easy to be a critic, but I think it's important to see when a founder is building and what the requirements of those times are.
So when these companies came in, they were building for fast growth, which is what their mandate was. And then they suddenly got penalized for it because the whole macroeconomy, the global macroeconomy changed, because I don't think the pandemic had as much of a shock because that the governments were managing as a Ukraine-Russia crisis because of oil prices. That energy shocks that we went through, the commodity price shocks that we went through, that did not go away, especially with Trump in power. So there's a whole global game that is affecting the dollar. I think right now it's helping us because as the dollar weakens, the rupee doesn't depreciate. So right now it's working for us in this moment, but 5 years now, even 6 months from now, we do not know what's going to happen.
We don't.
And we don't know what's going to happen in the Middle East for the oil prices to go. So all of this is beyond the control of any mobility company, any part of the world.
100%, right? And who was asking for sustainability? Like, did anyone go and ask these founders to grow sustainably, pre 2022? I would have to say no. I think they were going back and saying, why aren't you growing faster? Why aren't you growing faster? Why aren't you growing faster, right? And so everyone was doing their job. Were we achieving our targets? Yes. That target just looked very different, right? That growth rate on GMV was much higher then. And
gross market value?
And on the bottom line was much lower. And today it's in reverse. Today investors expect that my bottom line will grow very, very significantly and my top line will grow less significantly. And so I'm doing my job today. I was doing my job 10 years ago when I was burning crazy money, right? And whoever had given me that task was doing their job, right? Like that's just the way I'll put it. But I think also, there's been learning. When the first real tech company we saw was Rocket Internet in Pakistan, right? Food Panda Daraz. We were doing this for the first time then as an ecosystem, and we didn't know what the rules for Pakistan are, right? And so we were following global rules that were being followed in all other markets. I think we learned much later things just like, acquiring users, for instance, at a price too high is not something you can afford to do in this country, right? And on the supply side and on this and on that and what the propensity to pay really is. And so you need a slightly different model around growth. These are not things that anyone knew. It was being done for the first time. And I think we've learned those things in Pakistan, right? And so there's a much higher focus on just your customer acquisition cost versus the lifetime value of a user today, which wasn't obviously the case back in the day. And so on and so forth. So there's been a lot of learning. But also, credit where due. I think founders were doing their best. I think what their job was, that job description just has changed very significantly.
So right now, sustainability and profit lines, bottom lines, that is the name of the game. Right now, you have a -3% burn and you hope by December that you will be profitable. What could happen to change all that? And then BusCaro, I don't know, it's a very ominous question, but BusCaro would have to wrap up. How high, for example, would the oil prices have to go or your other expenses have to go?
I think I'm the founder of BusCaro. I never wanted to shut down. But if I think about this just as somebody who understands mobility, I think it's very difficult to shut down a BusCaro. This -3% could get higher because margins will thin down. You could lose scale. I don't think it can be shut down per se unless this country has completely collapsed, right? Like short of that, I don't see that happening because if fuel prices become 10x what they are today, going around in a high capacity vehicle is still the cheapest form of commute, right? I actually then become even a whole lot more competitive than bikes, right? And so a male user taking a bike today also needs me tomorrow because then this is the cheapest form of commute. Now, either we're making the assumption that everything is work from home, right? Unlikely to happen in Pakistan. And so people still need to get somewhere. This is still the cheapest way to do it. That's the way that I would look at it, right? So maybe we have more of hybrid working models where organizations say, okay, just come in 3 days a week. And so we lose a little bit of business there. But overall, our schools say come in 3 days a week. But I refuse to believe that in Pakistan, every school will be online. Every organization will be online. And so I don't really, see that situation.
So believe their business model.
I just see a lot of problems and a lot of lost sleep in this scenario that you're painting. I don't think it's going to shut mobility companies down.
So, because of your business model, aggregating in one place, the drop off and the pickup point, that entire model is more sustainable and less responsive to global macroeconomic shocks or local shocks. Until even if something extended happens, like there are massive protests and the whole country shuts down, even that would last weeks I hope it doesn't happen, but so you will take a hit and then you will continue rolling a few weeks.
Yeah, absolutely. As long as people are still leaving their house, there is a business for us. It would obviously, it's more difficult for a mobility company that's doing, luxury vehicles, right? But what we've seen so far is people end up downgrading when things become really expensive, right? And so I might have you as a user today in a sedan, and you might say, put me in a 13-seater. You might be a 13-seater user and say, put me in a coaster. And now your ride time is a little bit longer. You're that, and you say, okay, now give me non-air conditioned and give me an even higher capacity vehicle because your propensity to pay has decreased. But outside of that, there is still, I can't imagine, I hope we never have a situation where a mobility company in this country has shut down simply because there is no more demand left. That we'd have bigger problems than my company shutting down.
So you have different segmentations of the market. You have the big coasters without air conditioning, and then you have can you tell me what your portfolio is? Where does the bulk of the revenue come from? Where's the bulk of the demand and where's the bulk of the revenue? Two different questions.
Sure. Fatma, bulk of the demand is the wrong way to look at my business because my demand is so much higher than what I actually cater to. And so the split between, for instance, air-conditioned, non-air conditioned is fairly similar. I'd say it's like 50-50. It'll, go one way or another depending on the month. And just which client heard about us then and so reached out to us, right? From our revenue, again, today, it's more non-air conditioned compared to air conditioned, but I don't think that tells you much about the market because that's really just who we chose to work with, right? Or who we chose to scale with. But I think there's a lot of demand on both ends, and obviously Careem shutting down a few months ago leaves a huge hole in this market, right? And so
that also helped. I think it helped in rise. They were just giving me some numbers, and one of the reasons that the numbers have just gone up is because the Careem has left the market. I think it helped all the mobility players.
I think operationally that could be true, yes. I don't think that's necessarily the best case for customers because if we're comparing ride-hailing to ride-hailing, and again, I'm not ride-hailing, but Careem probably had the best service. Probably had the most on-ground resources working on operational things, probably did the most work on safety and security. And so as a user, I was a Careem user, and I'm very upset that I don't have that option now, just because now that means there's a compromise on my safety. And so I'm not happy as a user. As a founder who's picked up some of their business, am I happy? My team is a lot happier than I am because they get to onboard business that was with Careem. For me, going out to fundraise, it's just not worth it. Like, I would happily give that business back to Careem because this hurts investor sentiment tremendously. When you think about Pakistani companies that have made it, Careem is the first name that comes to mind. And so when I'm going to an investor today, the thought is, oh, but Careem couldn't do it, right? And also for a company that's not even doing mobility, it's just like, Mudassir Sheikha pulled out of Pakistan. Who the hell are you kids, right? And so it's terrible investor sentiment-wise. It's very sad for me as an ex-colleague. It does mean that, yes, there's business that's gone to other players. For B2C users, I think it's a real tragedy. I don't think anyone else is giving them that sort of safety that they felt with Careem.
So with the Careem's exit, and if you look at the MNC sector, P&G's exit, I think it's not what the market is suffering right now. It's the impression and the funding, the investment in multiple sectors, whether it's FMCG and FDI or whether it's VC money. I think a lot of that is just not going to come in because we are perceived as such a risky market.
I think that for me, if you ask me the number one reason why companies are at the risk of shutdown in Pakistan, it's tax. It's just taxation. It's as simple as that. There's no logic in how we're being taxed. I, as an example, am taxed on GMV. not revenue, GMV, right? That means that let's say I did 100 rupee of sales, they're taxing me on that 100 rupees. And so if you're taxing me 6%, you're taking 6 rupees away from me. My margin, depending on what company I am, is probably 10 to 15%, which means really I was making 10, you took 6, and you've left me with 4. You've taxed me 60% when you think you're taxing me 6%, right? That's outrageous. It's absolutely ridiculous. And that's for the tech sector. When we talk about, other profitable companies, again, they're all getting taxed 40, 50 ridiculous percent then on net income and things like that. And so I'm going to say taxation makes it impossible to run a business in this country. And if we can't solve for that, we are in big trouble.
I absolutely agree. As part of the salaried class, I get heavily taxed as part of being on the formal neck. It's like we're getting penalized for being the good guys, doing the right thing. When you have the informal sector, why would they want to be part of the formal economy when they have to make taxes? They'd rather go to a loan shark and get the loan rather than formalize themselves and go to a bank to raise financing, because it's just so much easier. There's so much more money to be had if you're not paying taxes.
Absolutely. And like we've seen this, right? Even with shows like business shows that we've had in the country. And there's a lot of talk about there was so much investment committed. Why hasn't it gone through? These companies can't pass due diligence. And if they want to pass due diligence, they need to sort out their regulations. And if they do, they have to basically shut down because they're suddenly so unprofitable that the business no longer makes sense. And what does one do, right? And so I'm definitely not saying that people should not be paying their taxes. Please do. But there has to be measures taken that allow for the salaried class to survive and for companies to not shut down, right? And if you think about it, for me as an entrepreneur, one, my taxation on business is insane. And two, if you're an employee of mine, you're being taxed so heavily that to manage your net income, I have to give you a raise, which is a further cost for me. And it's where do you go and what do you do, right?
And the people that are using your service are also being taxed heavily. So if they're being too taxed heavily, they won't be able to afford the service. And then there's a whole domino effect, right? There's a trickle-down effect. The taxes in the country that are keeping the country afloat are also the reason that it's, there is no growth.
We need to be collecting a lot more tax than we do today. I just think
not through the formal sector or the overtax.
Use our common sense in how we go about doing that.
Yeah, absolutely. But coming on to more positive things, you got $2 million in funding. You expect to be profitable over the next few months. What is your vision for the next year and the next 5 years?
Next year, I think we want to start making money. I'd like to have launched some part of B2C by next year, which we'd build on top of our B2B2C, and so makes a lot more sense in terms of sustainability. We would like to have launched another market by then. And
by which you mean another city or outside Pakistan?
Outside Pakistan.
So you have plans to launch outside Pakistan?
Yes. And specifically around children's commute. That's what we're focused on outside. And so that's in the next year. In the next 5 years, I would just want to see Buskaro have, scaled enough where when I think about our contribution to the economy and to women in this country and to children in this company, that number suddenly doesn't seem like a joke. And so I think that's what we're looking to do.
Great. I think I'm so on board with that, because as a mother and as a working woman, commute is such a challenge. It's such an overlooked challenge that I'm glad that there are more entrepreneurs like you. And I think it helps that you're a woman, so you understand the challenge that others do not, who are solving for the little things that allow more women to come into the workplace. And obviously, more working women means a higher GDP. It's a very low-hanging fruit that is being ignored in Pakistan. Thank you so much for coming to my show, Maha. It was an absolute pleasure having you.
Likewise. Thank you for having me.
Great.